Today, we're going to untangle the hidden threats connecting the price of Bitcoin, the moves in China's currency, and the high-stakes game going on inside the U.S. Federal Reserve. It's a massive global tug-of-war, and we're about to figure out who's really pulling the strings.
You know, you look at these three things, and at first glance, they seem like they're from different planets, right? You've got a decentralized crypto, a tightly state-controlled currency, and the central bank for the world's biggest economy. But as you're about to see, they're actually locked in this incredibly complex dance, and if you understand the steps, you can start to see what's coming next.
All right, let's start with the action is, the Bitcoin charts. Because right now, traders are getting some seriously mixed messages, and it all starts with this thing called a CME gap.
So what is that? It's actually pretty simple. The big money futures market, it closes for the weekend. But as you know, Bitcoin trades 24/7. So when the suits come back on Monday, there's often this gap on the price chart. And for traders, that's not just empty space, it's a major clue. Now, here's the crazy part. Historically, an incredible 95% of these gaps end up getting closed. What that means is the price of Bitcoin almost always comes back to fill in that gap. It's become this weirdly reliable predictor for where the price might go in the short term.
And this isn't just some old theory. I mean, this literally just happened. This week, a brand new gap opened up, and bam! Within a few hours, the price shot right back down and closed it perfectly. It's a powerful signal for sure, but it is definitely not the whole story. And this is where the confusion comes in. While that gap closing is a bullish or positive sign, there's another key indicator that's flashing a big red warning light. It's called the Coinbase premium. Basically, it shows if US investors are paying more or less for Bitcoin, and right now it's negative. That's a bearish sign, suggesting that folks in the US are selling, not buying. So, one signal says go, the other says stop. What do you do?
This mess on the charts really begs the question, right? Is this just random market noise, or are these conflicting signals just the symptoms of something much, much bigger happening behind the scenes? Well, that's our cue to zoom out.
So let's pull back the curtain on the first of these huge forces, the quiet but very deliberate strengthening of China's currency, the yuan.
For the longest time, the playbook was simple. When China's currency, the yuan, got weaker against the dollar, wealthy people and companies in China would try to get their money out of the country to protect its value. And where did a lot of that money go? Yep, a big chunk found its way into Bitcoin, pushing the price up. But since April, China has completely flipped the script. The People's Bank of China has been engineering a slow, steady strengthening of the yen. So now you get fewer yen for every US dollar than you did just a few months ago. And trust me, this is no accident. It's a calculated policy, and it has huge consequences.
And the way they're doing it is kind of brilliant. They're targeting a popular Wall Street strategy called the carry trade. The simple version is you'd borrow money in cheap yuan and then invest it in higher interest US dollars for an easy profit. Well, by making the yuan stronger by just about 1% every couple of months, China has perfectly wiped out the profit from that trade. Suddenly, there's no reason to sell yuan for dollars anymore. Capital flight stopped in its tracks.
It's this incredibly delicate three-step dance they do every single day. First, the central bank sets a target rate. Then, they use their giant state-owned banks to go into the market and buy or sell dollars to nudge the price where they want it. They do it just enough to scare away the speculators, but not so fast that it makes all their exports suddenly too expensive for the rest of us. It's really a masterclass in currency control.
Okay, let's zoom out one last time to the giant in the room, the US Federal Reserve. Because while China is executing this precise surgical plan, the Fed looks like it's caught in a tug-of-war, with pressure coming from every direction.
So inside the Fed, you've got one camp that's basically saying, whoa, let's pump the brakes. This quote from the Cleveland Fed president, Beth Hammack, sums it up perfectly. They've already cut rates, and now her side wants to just wait and see what happens with inflation and jobs before they do anything else. But at the very same time, the pressure from outside the Fed is just massive. The government is pushing hard for more rate cuts to juice the economy. And with the new Fed chair about to be appointed, everyone expects it'll be someone who's more willing to, play ball. So you've got this huge fight between internal caution and external political pressure. So this is it. This is the collision course we're on. What happens when these three powerful forces finally smash into each other? Bitcoin's shaky charts, China's iron grip on its currency, and the Fed's internal battle. We are getting very, very close to a moment of truth. And that moment could be triggered by any one of these three things that are right around the corner. We have a major Supreme Court ruling on tariffs, the chance of huge stimulus payouts because of it, and the official appointment of a new Fed chair.
Any one of these could light the fuse. Let's just focus on that first one for a second. There's a Supreme Court decision on trade tariffs that is expected, literally, any day now. And officials are already dropping hints that if the ruling goes their way, it could unlock a plan to send out $2,000 stimulus checks to a whole lot of Americans.
And here is where the entire puzzle clicks together. A sudden flood of hundreds of billions of dollars into the U.S. economy would hammer the value of the U.S. dollar. That would force China to immediately react to keep its own currency plan on track. And that sudden, massive move between the world's two biggest currencies would send shockwaves of volatility right back into the crypto markets, probably resolving that conflict we saw in the Bitcoin charts in a very, very big way.
And all of this brings us to one final big thought. This crazy chain reaction from a U.S. court to a policy meeting in Beijing and all the way back to a Bitcoin chart, it proves something profound about the world we live in. No single government, no central bank, no group of traders is really in control anymore. We're all just pieces in a much, much larger global game. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. We've got more news in our Telegram channel. Check out the first comment. See you next time.